Sense, where we talk about personal finance, investing, and chart analysis. Today, I'm doing a follow-up on ticker symbol JWN. This is Nordstrom. A viewer had requested a follow-up on this chart, on the company, etc. So we're just going to go ahead, look at the chart, see where the candles have fallen based on my earlier drawings, and go from there. If you've made it this far and you are interested in learning about charting, calculating stock price, looking at support and resistances, consider browsing my channel and hitting that subscribe button. Let's jump in. All right, you guys, we are looking at Nordstrom. Let me get my big old head out of the way and let's look at the monthly because that's what I do. I look at the bigger picture and then I go from there. Okay, this is the power of technical analysis. So I drew these lines quite a while ago. As you can see, this next candle bumped its head right on top of it. And let me zoom in for everybody, actually. Zoom, 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 zoom. Candle right on the dot, right on the money. And as you can see, the next level of support is going to be this $11.71 line. And it looks like the company is heading that way. That's just what we're seeing from that part in terms of charting. If we look at money flow, it looks like actually money flow is moving in an upward direction. Strength is heading down. And relative momentum is kind of rising. So let's just call things out as we go. So the company is profitable. They offer a nice dividend. They are very extremely, insanely overvalued today. But in the future, they're undervalued. Now think about how would a company be overvalued today, but in the future they would be undervalued? So that comes into guidance and projections of where the company is going to be. So trailing 12 months, we're at $14.8 billion in sales. That is amazing. We can see the trend over here. It went from 3.3 to 3.1 to -4 to positive 1.1 to positive 1.5. If I had to guess, it would continue higher. And I only say that because it only went down on a decreasing cadence. So decrease, decrease, boom, increase, increase, boom. So I'm going to say next quarter's EPS could be good. Whether the earnings per share data guidance is all good, you still have to be aware of the overall trend. And if we zoom out and look at the bigger picture here, the stock has been on a downtrend for the last 8 years, the last 8+ years. Will we see reversal? Maybe. This is the apex area that I always talk about. The apex is where support and resistance collide. So we can see here support, this line right here, and resistance is this line right here that I keep bumping. So right in this sweet spot, the stock is going to either bust down or boom up. So let's continue onward. Let's go down. Insider selling is not a good sign. Looks like the chief HR officer sold over 50% of their stock. Not good. It looks like the president sold almost 50% of their stock. Not good. Brian Wurtzel, it looks like evened out. And then it looks like Terry, chief merchandise officer, evened out as well. But we do have these two people right here selling quite a bit. Let's look at the quarterly revenues. So the last data we have is they had 2.3 billion. That's a lot. They're sequentially increasing. 3.7 billion from 3.1 billion, but it's down from 4.3 billion. So they're pretty much flat, honestly, if we go back up here. they've been in this flat state for about 4 years, going on 5, maybe going on 5. So that is something to consider. Institutions own 53%. I'm going to say they probably own a little bit more than that now. So I'm going to check the recent institution hedge fund data. If you go to fintel.io, it says they own 68%. And if we look at this chart right here, let me probably just click it. We can see the trend of insiders buying looks like it's going up. So again, June 2020 going down, kind of leveling down, leveling up. And this is the highest it's been since 2020, beginning of 2021. So in terms of institutional sentiment, I want to say institutions are liking this based off of that information. Where's my screen? There we go. So yeah, that's kind of where we're looking. If I am looking at entering Nordstrom, I would wait just maybe a few more months, see if we get down to this $11 target price, stock price. Just because, we have Christmas coming up. Retail stores are always getting hit. Theft is always up. So I think this one's worth watching lower. I think the stock price in the future is going to be fairly undervalued. They do have tons of debt. That is something to consider as well. Let's take a look at their debt. They have $2.8 billion in debt. That is not good. Total assets is 8.8 billion. Total liabilities 8.1 billion. Cutting it extremely close there, if you ask me. Too close for my comfort, but there's nothing stopping them from addressing that debt. They do make 14 billion a year, well, the last trailing 12 months. So again, they have the opportunity to tackle that debt. So I would, if I was them, I'd cut that dividend for a year or two, tackle the debt, and just be a resilient company. Let's look at the whole picture. Going all the way back to 1983. Wow, this stock was $2 and it went all the way to 80. Not that bad. So again, there is several areas of resistance to watch for. This first one right here, again, I'd wait a few months, see if it touches 11. Then the next level of resistance is this long-term one right here. We probably won't get there until 2040. So yeah. Again, watch this. Watch it get to 11. You might see it spike up to 15, 20. Maybe even get back to this line right here of 30. You never know. But in terms of Nordstrom, I would wait it out. See if it gets to 11. Does it hold 11? Does it break 11? Just see how it goes. Let's see how it goes. If you guys made it this far, please consider hitting the subscribe button. If you saw my first Nordstrom video and you're now watching this one and you haven't subscribed, think about it. Have a good one. Talk to you soon. Bye.